It's week 39. You are listening to the StockInvest.us podcast, and my name is Jim. Last week, Nasdaq fell 5%, but we managed to make money on the trading tips. I'm not sure if we will be that lucky this week, but we will give it a try. Which stocks are we going to look at this week? Well, you will have to wait till the end of the podcast, where I will give you the trading tips. As usual, we will run through the market and what can we expect for the week ahead. What are the big news? What are the items to look out for? Well, there is a few of them, and I will give you that shortly. As always, we have to listen to the disclaimer, and I will be back with the market situation before heading to the trading tips. So just stay tuned.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
I guess you're tired of listening to the disclaimer and you may just have skipped it all, moving fast forward. But here is today's lesson number 1, and it's not about the disclaimer itself. I told you last week, in the red markets you have to have patience. Patience is the key. I asked you to hold your horses. And there is more to it than just patience. When you skip information you do not like, you are likely to do the same thing when stock trading. And in a bull market, which we had, I think it was 11 years before the pandemic, of a good upturn, stock trading is not so hard. The really hard thing is to make money in a red market like we are in now, in a bear market. Of course, you can be successful betting only on shorts, etc. But in general, this is the place where everyone loses the fortunes they build up during the 11 years. Could be lost in just a few days. Some will go through that long pain of losing everything before we finally hit a bottom. So lesson number 1, be patient and try to get all the information you can about your stock. Try to learn what are exactly the company doing. Don't let things be up just to random. As I said, more important than ever when you are in a bear market. And I try to help you with these things, giving you a market overview where I give you a little insight in what's happening this week and what are the things that can cause a huge market disruptions. Last week, of course, it was the interest rates, but if you are a listener to this podcast, you heard this many years ago now. This was the thing that had to happen. And as I told you, it would be brutal, and we are still not done with that part. There will be more interest rate hikes to come, and as I told you, that will go for unemployment rate and all of these things. So be patient, do your due diligence, try to understand where you are. It will guarantee you, it will help you in the trading. The other thing, just to mention that about the disclaimer, is that you should not put all your cards in what I am saying or someone else is saying, because trading is very individual. The amount of money you have, the ability to do diversification, the number of stocks you can have, timing, and of course in many cases I'm not correct and others are not correct. The best thing you can do is educate yourself, because in the end you are the one to make the decisions. It will directly affect you and your income. But enough about that. Kind of moral preach in the early morning here in Vilnius, but I hope you get the point. Be patient, do your due diligence, try to understand what you're doing. We're not here on random luck. And for the week ahead of us, what are the things that can cause anything this week? So what are the facts? We know the facts. The facts are that we are in a bullish market. Meaning, a bearish market, meaning that it's a hard market where things are tending down and we're going down. Have a few weeks of upturn, then it's down again. So we know the trends are obviously down. What are the other things that we know? We know that the last time we were at the bottom before we had a little okay upturn was 10,600 points. And right now Nasdaq is trading around 10,800. So we are very close to that very vital point of 10,600. We will look at the charts in not so long. I will first finish the fundamentals. But as you know, these things, if broken, we are settled for more downturn. We also know that we are heading for a winter. It's even starting to get cold in Vilnius. Nights at 6 degrees, and in general, being on central heating, things are cold. And everything indicates that the winter will be cold. And now you heard me say that very first, but now you hear everyone saying it will be a hard winter because the lack of energy. So we are in a state where we are heading for a colder winter. Will this affect stock trading? Well, as energy prices go up, as inflation go up, of course there will be less money for trading. And as stock market go down, there will be even less money for trading. It has to do with gearing and all these kind of instruments. But at the same time, we know that at some point there will be a bottom, and there will be one very, very unique opportunity for the longer term. So, and I told you, I promised you, I think it was 2-3 podcasts ago, that I will start think about what are the things, those really deep lines, when and where can things turn? What are the things that really wait us ahead? I'm still in the process trying to put the pieces together, but I read one interesting article this morning. It was mentioned that previously, from I think it was 2009 and a few other years where there has been a bear market, the change where the market turned was just before the governments officially declared a recession. And as we know, Biden refuses to say that we are in a recession. They try to rewrite everything and they just hold on to the longest. No, there is no inflation, it's inflationary and everything will pass. Prices will go down, everything will be okay, and there is for sure no recession. Look at how strong everything is. But the fact is totally different, and you will hear that as new quarter results will come, you will hear more and more struggles within the companies themselves, where they have to give the outlook for next year. And I think I was back in quarter one or quarter two, I told you about these things, that now you will soon start to hear the companies say about, because they have to post outlook expectations, they will have to post what they think. And we know that Fed said that it will be very hard, and more of these things will come, and things will start to look very depressive. But again, as I told you before, the stock market will turn before the fundamentals and the rest of the world do. Do I think that we are now where the stock market will turn? I'll repeat myself. I don't know. I think this is a much better opportunity than it was when Nasdaq was 16,000, but we can head for more falls. We are technically getting close to support, and as I will tell you in just a few minutes, the sell signals are now the highest they've been, the buy signals the lowest it's been, and they usually indicate a very good pickup opportunity for stocks. But to finish that argument, trying to understand where are we? We know we will head for a very hard winter. We know there are things happening in Ukraine right now. Russia is on the defensive front. Will that cause things to turn onto the negotiation table? We know that at some point even United States will have to accept, or not accept, but allow Ukraine to start to go into negotiations, because we see the huge consequences. There's much more than the suffering of the Ukrainian people, the hammering of Ukraine. Europe is getting into a recession. We will have energy crisis. As I told you, when things go bad, there will be political, not revolutions, but changes. And they may not be to the better. And now, Italy had an election going to the right. Sweden had an election going to the right. Some of these things will be good. Some of them will not be good. Because it's the same thing. At the very far right is bad thing. At the very far left is very bad thing. You want a consensus somewhere in the middle. Somewhat stable. And these things can have long-term consequences, because populism will grow up even more than it has. Of course, now we are in the situation where we take the cost of all this woke stuff that's been for years. Most insane thing in this decade, of course. We will have to pay the price until things get back straight. And we go toward more reasonable politics again. But as I said, we are heading for a hard winter. We see changes in the politics. Will this prolong, or will it stop the downturn in the stock market? Again, I can only say what I think. And I think that we will break the support at the 10,600 for Nasdaq, and argue what I did many months ago, that we will have to go down to around 8,000 on Nasdaq. Hopefully I'm wrong, but what you should know, and I will try to come with more solid arguments, is that now we will see businesses take very huge tolls due to the inflation, and the inflation will not stop. It will just continue upwards because of the winter. And the same with interest rates. The interest rates will kill the economy. It might cause a housing crash, and we will get into a much bad place than we are right now. Much worse place before it finally turns. I would like to say that I believe the end of the bear market is less than 12 months ahead of us. That during the 12 months ahead of us, we will see a shift in the stock market. But I need more data. I need to see more bigger lines where we are, because we can go into a really deep recession, depression, if things doesn't start to turn. And it doesn't take much to turn these things. We just need some sort of peace agreement in Ukraine that can start lift things in a much better direction. But on top of this, we have Taiwan conflict. We have more aggressions towards China. China is responding aggressive as well. And these things can suddenly escalate, and things go into much worse scenario. Rounding that part up, getting to the rest of the fundamentals for the week before we do the technical, is I think there is a fair chance that the market will turn within the next 12 months. Exactly when, I do not know. If I just to give a bet, I would say maybe somewhere by the end of this year, beginning of next, that we might finally see the bottom. During this week, because that was the long-term picture. During this week, what are the things to look out for? Well, there will be many different numbers now, and they will mainly just confirm what we already know. And what Fed argued, that they have to control the inflation. The biggest number of them all is maybe the personal spending numbers on Friday, consumer spending numbers. But they will just say the same thing, that people are prioritizing differently. There is still a lot of money that we need to burn through in the markets because of that exceptional money printing, which has been, especially the last 1.5 year, but even before that, and not only US, but in all other countries as well, printing money like crazy, and causing, together then of course with the logistics that we have discussed many times before, this disruption and later on the huge inflation. So for the week ahead of us, many numbers. They will in general just confirm what we already see, but I don't think any of them are the kind of numbers that will really scare the market too much. There will be some quarter results. We will have bought Bed and Beyond, BBY, on Thursday, and we will have Micron Technology also on Thursday. Two interesting companies there, and there is a sad story about Bed and Beyond, where one of the key executives committed suicide recently. So Bed and Beyond is interesting, not because of that sad story, but in general, their business, the potential upside if they're managing to turn things, and Micron is always very interesting because it's a volatile company, and you can of course place your bet before or after, depending on how aggressive you are in your trading, because I think on Thursday these stocks will move in one or the other direction. I will not say which one, but they will move in one or the other direction, and usually volatility is the place where you can make money but also lose money. So no big numbers this week. The other thing that we follow is oil, and oil was down $6 last week to $78. Gold also down $22 to $1,648. Both of them falling below my targets. As I argued, I think oil will have a strong upturn and peak very high before it falls. Hopefully I will be wrong, because low oil price is good, has to do with energy, and the huge part energy plays in production of goods, transport of goods of course, and that means it affects inflation in more or less any possible way you can think. Gold, I'm a little surprised that gold been falling as low as it has. But it is that awful red market, and again, keep repeating myself, things I told you before. When interest rates go up, money flow to more secure items like bonds, etc. When you get guaranteed money in the bank, why not just stay there? 10-year treasury yield, the one number I always point out. When it goes up, market goes down, and currently it's 3.7, up 0.25 or 6.76% last week. So the 10-year treasury will just continue to go up. You hear arguments it will go down, it's already too high. Again, I think the number will just go up, and there are a few reasons for that. Summing up that fundamental part, nothing really big this week. I think it will be external news. There can, because there are some signs that there are some political things coming up, and of course we are heading towards midterm election in the United States. Should see some political things, and some of them can affect the market. So you should pay attention to this, because it can affect the single day, but also the single week and the forthcoming months. So keep an eye on the news. And sometimes, as I said last time, sometimes it's good, just scan the news, try to get an overview of what is happening. You do not have to dive into absolutely every one of them, but get a sense of how things are moving. That brings us to the fundamental part. As I always told you, if there is not too many fundamental news, it's a good thing, because that will give the market a chance to react up. If the market is continuously hammered with bad news, it's very hard to be optimistic. So we like a situation like we have this week, nothing really major coming up for the week. So what are the technical things saying? Well, first off, If we rewind very back to some of the beginning of this podcast, and I started to tell you about the signals, and I told you when signals are, and I'm referring to the buy and sell signals, the amount of buy and sell signals. When the amount of sell signals is extreme high and the amount of buy signals are extreme low, you usually get a change. And every time I mention this, as you know, the market's been going up afterwards. And I told you last week when all the signals that we analyze only had 20% buy signals, we are getting closer. But we are in a situation where things can go very rapidly down, very fast, because volatility increases. We are in a market with, we can say that there is hope and panic on every second corner. It's just up and down. This week we are down at 14% buy signals across all stocks, across all markets that we analyze, and that is quite many. That number is as low as I haven't seen for a very long time, and I can guarantee you one thing: we are heading for a super buying opportunity. Because if we go to Nasdaq, it's only 5% buy signals on Nasdaq, and we had to be in front of the pandemic to even be close to such number. Hardly absolutely no buy signals means that we are turning. It's just exactly that when. And you heard me give you a trading tip in the very beginning. Be patient, hold your horses, and that's the best advice I can give to you. There is a twofold strategy. One is that you assume that the bottom is very close, that we can have a very strong upturn, because when signals are this low, you usually have a strong upturn. Could last 3 days, could last a week, could last 3 weeks, you never know sure, but that there will be what we call a rebound. You can spread out a little, increase your portion into the market, because by all theory there should be a better opportunity. The other thing you can do is hold your horses. Look for stocks that is extremely oversold, good support on the downside. Go in like we did with Nvidia last week. Go in, buy, and go quickly out. Which strategy works the best? The problem, the real problem, because if you look at the New York Stock Exchange, only 3% buy signals, and London 9% buy signals. This is way too low. It's way too depressive. It means that we will have a fantastic bounce up, but we don't know exactly when. And we know that when markets are this scared, it can just continue strong down. So how do I play it? Well, usually in a case like this, when there is a high chance for an upturn, you take several bets. You go in, you take a bet. If it continues down, you sell no matter what. You do not sit, you sell, because you do not know how far down it will go, how much panic, because we are in a situation where we can get 5% down in a single day. We can see markets getting close. I've seen this before, back in 2008 and 2000. We saw these things happening when market totally overacted and got down into a super spiral. Actually, these spirals, these super down spirals, also signaled that final bottom. We had 3 of these extreme fold where the markets were closed, and they represented the end of the bear market. So we are there, but these falls can be brutal. So if you go in, you have to have a stop loss, and you have to go out, and you have to accept the loss. If you're lucky and you hit when that upturn comes, I promise you there will be stocks that will do 20, 40, 50, 100, even 200%, because the market is so hammered. But quickly, we will have a look at the chart. Tokyo, 27% buy signals. As I told you, just go back. Let's week 34, when China was China and Tokyo, Japan, session in China and Tokyo and Japan, were up at 45, 46, 47, 50. I told you we probably will see a fall in Asia that will lead up to a more huge fall in Europe. Exactly that happened. Now we have Chesson at 8 and the market is way too low, and I think that we will see an upturn, and I see that same upturn will come. Exactly how much I do not know. But before ending this section, I'm going to before we go to the trading tips, because I know you're waiting for the trading tips, let's have a quick look at the chart. And if you're listening to this podcast on Spotify or wherever you are, it will also be available on YouTube. And on YouTube you can see the charts and you can see some of these signals I mentioned. It makes it a little bit easier for you to follow. I pulled up the chart and the chart is very depressive to look at, because it's been a constant downturn since 13,128 points for Nasdaq. Had a slight upturn back in around September 8, where it managed to gain around 1,000 points before continuing down. Now we are heading to that 10,600 limit, which I told if it's broken we can fall much harder. For the short-term chart, there is a sell signals from the long-term moving average, the short-term moving average, and even the relation from these two averages. To get a better overview, we will go to the long-term chart, and as I told you, that's a very good exercise, because when we were up at 13,000 points, I told you we are now in the top of the trend. Usually you will react. Here in this chart you see much better what I try to explain. On the right hand side you will see a lot of gray bars. These are accumulated volume, how much is traded at each level. And the thing that you should look at is that under 10,600 there is no support, and that's the scary thing, and that is why we can have these extreme falls. Because if markets do not pick up from 10,006, move a little up, we will test the support at 10,600, and the falls can be very hard, very hard. As I say, I will not be surprised if we get to a situation where they will close the exchange. That's happened before. Close trading for half an hour, maybe more, trying to settle the market. You get into panic mood, totally panic mood. Relative strength index 35. And as I said, this is really where things can go very fast, very bad. At the same time, we are oversold. So it offers that extreme opportunity, but you have to have patience. You have to hold your horses, and by all means have stop loss. Except it's a gamble, because right now it's a huge gamble. This is not the market. If this was clearly an uptrend, I would just say go buy more. You heard me reduce my investments in the stock market, reducing, because we are in a situation where we have a bear market, and when I feel confident that we are in an upturn market, I will just increase my exposure. Now I'm just trading with profit from previous gains. So in fact I can actually lose everything and still will be in the green. We are here trying to learn you this: reduce your losses, increase your gains. This will be a perfect example of this week, because it will be the test of the 10,600. So we have a situation, fundamentals are I would say somewhat silenced, nothing majorly big. There are coming numbers, they will just confirm that we are in the negative territory, but the big problem, the really big problem, is that we are testing the support. So what happens here now? If we break down, be prepared for mayhem. It will be huge falls, and it will be very volatile, falling. You will see Nasdaq fall 3% in a day, just to go up during intraday and end in green, maybe by 1-2%, like we had some months ago. The other thing is that there is a chance that we turn at this point. Then we will have a new bottom above the previous bottom. The previous bottom was 10,600, and as I told you, if we turn above that, we will have two bottoms. Even if they go side by side, we will have something called double bottom, which will signal an upturn. But if it turns above, it will be the first somewhat okay signal that we go up. So if you have the situation, things move up, and they move up on good enough volume, enough momentum, we can actually establish a bottom, and that may very well be the final bottom of this long bear market we've been into now. So there is a chance. Personally, I don't think the support will hold. I think we shall go further down. The trend indicates everything, but we are in the middle of the trend, and usually when you go to the top of the trend, you have to go to the middle, turn up before testing if you are able to break the trend. So very, very special situation this week. We'll get a lot of answers. I will not dwell more about it. I tried to give you my insights. I will have to come to a conclusion. Do I think it will be a red or a green week? And this question is really hard to give an explicit strong answer on, simply because there are so many conditions. Breaking down 10,600 will be mayhem. If 5% last week, 5.4% down on Nasdaq last week, it can be even more this week, just so you are prepared. If there will be an upturn, we have to realize all the resistance above. It will not be that big. Risk reward, of course, that makes not the very best. When you have low upside or struggling on the upside and you have no support below, meaning that there is extreme risk on the downside. I will have to make a qualified bet. I think we will head for yet a red week, but a week with many buying opportunities. There will be stocks, single stocks that already bottom out, that will start. We will start this week for some stocks for a pickup. So end of a conclusion, way too long market section then, but I think that we are heading for a red week, but a week with many opportunities. And if you're lucky, markets will go hardly up, but be prepared. This can also be the week of mayhem. So we are in that last section, trading tips, which I guess you all been waiting for. And how did it go last week? Well, the 3 trading tips that was new last week, they all went in green. I will get to that shortly. But we will have to look, because there was 2 trading tips that were open last week. It was Zomedica and Rogers. Zomedica from week 34, and if we remind back to week 34, we bought Zomedica at 26 cents, and I said this will be a gamble. We will not hold any stop loss because the stock is very volatile and it moves a lot, and you will only use your high risk capital because it will be a risky trade in a penny sheet stocks. Been holding up and down, but not yielding what we wanted last week. Terrible for Zomedica, and it's currently down 21%. It's the biggest loss that we had in any stock. It still stays open. Should we close it? Well, if you look fundamental at Zomedica and the amount of money they have in the bank, the stock is clearly undervalued. This trades for me still stay open because it is a penny stock, which I've traded many times before, and we have netted strong profits in Zomedica before. So if it was a trading tips in week 34, it's even better now at 20. Personally, I think that there is free money to be picked, but nothing is guaranteed. There is a risk tied to everything, and even more so in penny stocks. So for anyone, this is, you shouldn't spend money you are not prepared to lose or sit with a long time, because we do not know. As I told you, we need a certain market situation for Zomedica to pop hard up. And if we get there this week, if this will be the green week where things bottom up and start to go up, Zomedica will just run very fast upwards. Zomedica stays open. Then there is Rogers, bought in week 35 at $253. Was not able to being sold. Had a 5% stop loss. Stock moved up, then moved a little down. But last week it finally fell below the stop loss and was sold with 3.94% loss. That's life. Stop loss was maybe too huge, but market was very bad. But what about the 3 trading tips last week? Home Depot, ON and Vida. As I told you last week, which will be the same tip for this week. in a market like this, you have to be hands-on. Previously to all of these trades, and as you know, we have netted last week 37 was the first week, not last week but the week before. 37 was the first week in 17 or 18 weeks where we had a week with losses. Usually we have been very good, successful in all weeks, netting profit week after week. But last week I told you, now things will move much more faster, much more volatile. You have to be much more hands-on. You cannot do, because I do not have time to all of this, I have other things to do than trading stocks. It's not my livelihood. I do this on the side. I try to run Stock Invest together with my colleagues. That's where we aim to build up a good source for you to get your information. And while saying this, remember, if you like this podcast, hit the like button, do a comment, help us get more views. That will ensure that I can continue to do these podcasts and hopefully help you. But back to the trades, the trades. I bought Home Depot at 275.50. The stock started to move up exactly like it should, past 280, and I thought, well, I told you about these psychological numbers, the round numbers. I put stop loss at 280, the stock moved a little up, then started to fall down, was cut at 280 at 1.63% profit. You may say, oh, 1.63% profit is not so much, but remember, last week Nasdaq fell minus 5.4%. And in this negative territory where we are now, if you are able to beat Nasdaq, that's very good. If you're able to go in the green, that is even better. And for those who brag about insane profits, well, there is only a few of you, because trading in red markets, most people lose money. You may very well do one good trade, but in average, you lose on the rest and you go in the red. So being in the green is a good thing. And even for On, we managed to go in the green. Bought at $68. I was not able, like for Home Depot, to get the very lowest price. But I got in at 68. And you may ask, so when do you decide to get into stocks? What are you looking for? There are a few things. The general tips, just the general tips. Stocks move in a certain pattern, markets move in a certain pattern, and very often these repeat themselves. That allows for technical analysis, which is the basis of the things that we do, and the signals and everything. Normally 20 to 30 minutes after stock exchange open poses a good buying opportunity. It's very often the low point of the day, especially if it's been a red day before or a red week before. Then Monday, then 20 minutes, 30 minutes after opening usually is a good buying opportunity. It's a pattern that keeps repeating, then it goes up in the mid of the day and falls by the end of the day. So you can use patterns. The other thing is that very often stocks fall to the support levels. I check where are the support levels, where are they likely to turn up. Let's say we have the red week, so the Monday start is usually always hard, and you then go in. So I picked On for $68 based on 68. I think it was 66 or 67 low, but then started to turn up, and I just wanted to go in, put on 68 straight, got in at 68. Stock move ups over 70, 71, $72. I just put 70 as a stop loss. I did not want to put 5% because Fed decision were coming up and a few of these other things. Stock fall started to fall, cut at 70, giving 2.94% profit. Nvidia. And I thought this will be the one stock that we could make some money on. I bought 130.25. It was much lower than that, but that was where we got in. Happy about that. Stock moved up over $140, and being in a very good position, I decided that I would not set my stop loss at 140, but just below 140. So if it just bips down to 140 and continues upwards, because it was such a good pace, being oversold and all these things, that's I don't want it to get cut at 140 if it continues up. So I put stop loss at 138.50, and that was broken and the stock was sold, but 6.29% profit. Very happy about that. So Home Depot sold with profit, On sold with profit, Nvidia sold with profit. Roger was cut by stop loss from trade week 35. So only stock open right now is Somerica. All other is sold last week. The 3 trading tips turned out very good, and even though I had to sell Rogers with 3.94% loss, the closed positions went in a nice green. But having Somerica open made the total overview less profitable. Still profitable, but less profitable. What about the week ahead of us? What are the stocks that I look for? Well, I told you, I think this can go both ways. It will be a very interesting week. If 10,600 is broken, be prepared for a mayhem. I do not want to get into too much stocks, and for sure not give you too many advices which can cause your losses to be huge. So we will keep that thing, hold your horses, be patient. If we see that the markets go up, then we can invest more. But for this week, I only have 2 trading tips. First on, it will be the same scenario like last week. We will be hands-on. We cannot just put 5% stop loss because it will be too hard. So we'll just have to follow the stock, and I cannot say right now where exactly that will be, because you have to watch the stock, you have to watch the day pattern, you have to see the volume. If the volume is topping up too much, then we get out. If the volume following the stock, we can sit a little tighter because we like that. We like volume to follow the stock. You should do another exercise. You should check out the relative strength index list. You can go to StockInvest. We have that list as well. There is other as well, because what you want to do, what you really want to do now is create a huge list of solid stocks. By solid stocks, I mean, do not look at penny stocks, do not look at low liquidity stocks. Find good stocks which are oversold on the relative strength index, have them on the list, be prepared to go in. Because at any point when market turn, and there are some significant to the turn, you can buy whatever of these oversold good liquid stocks and you should make profit. Microsoft, Apple, all of these stocks are coming on this list because the relative strength index, due to the low amount of buy signals, will be huge. And there will be so many companies that will go for a huge rebound. You just want to have that list prepared. You want to prepare. You want to do your due diligence. You want to have that list. Find which stocks that you have the most faith in. Where are the resistance above? How far can they go? What are the potential? Scramble your list, make it clear, and then when you are ready, if markets have a huge fall, you think the time is very correct, everything screams oversold, you go in hard. Put on a stop loss so you reduce your losses if you're wrong, and there will be strong gains to be made. Only 2 trading tips this week. One is fast now. May sound very boring and the company is just producing fasteners, FAST, but Fastnall is one of the trading tips. I like what I see. I think the risk reward is good, has support below, and I do not want to sit in that for sure, not giving you the tips that can really go strongly bad. So fast is one tip. I will try to get in as low as I can today. I don't expect too much gains, but I think the risk reward is okay. As I told you, I have plenty of cash at hand, getting ready to really take the market when the opportunity offers. And usually opportunity offers when everything gets two-way oversold. When markets fall 5%, you can just pick up whatever you want because there will be an insane rebounds. In 10, 20, 30, 40 minutes, you can make shitload of money and get just out. Be patient, be structured, be organized. This is the market where money really can be made. At the same time, lost very quickly. The other one, I told you, I think energy is way oversold. We're heading for a hard winter, and that energy prices should go up. Chevron looks very attractive to me. You know, if you listen to this podcast, we've been in and out of Chevron many times, made money in most of the cases, and I think that we will do this again. I think the risk reward is somewhat attractive, and I think that the oil can have a rebound. I'm just waiting for the exact time when, Chevron being one of them. These are the 2, 3 trading tips: Fastenal, FAST, and Chevron, CVX. But there will be tons of good trades. Do your due diligence, do your homework. Over all these podcasts, I try to teach you a few tricks. Get up your Excel sheet, write down all the stocks, find the lists that you like. I recommend, in this scenario, I recommend relative strength index being oversold. Have to make sure there is liquid stocks that you will trade. And be prepared, because there will be a very good buying opportunity coming soon. We just have to find that bottom first. That's all. Ended up with a long podcast also this week. Again, remember to like and comment. Make sure that we can keep this podcast alive. Until next week, it's fall. Leaves are changing colors. It's a beautiful time of year. Get some fresh air. Again, meet friends for coffee. Have a talk. There is more to life than just stock trading. We will dive deeper. I will be back next week. Until next week, have just an amazing week, and we will speak. Bye.